Brian Lehrer on WNYC. Now we'll talk about a potential AI bubble. Sam Altman, who leads OpenAI, Sam Altman of all people, OpenAI, the company behind ChatGPT, believes that an AI bubble is upon us. And it's not just him. The IMF, the International Monetary Fund, is calling it a risk to financial stability. There's little doubt that AI has been fueling the stock market boom. The value of AI-linked companies is up an estimated $27 trillion in the last 3 years, according to a published stat I read, more than a third of the value of the entire U.S. stock market. But here's the thing. So far, revenue and actual profitability have not paid off from these valuations. In the words of Annie Larry, who writes about politics and the economy for The Atlantic and is about to join us, market watchers are starting to get worried. They see financiers bulldozing giant piles of money to private AI startups with no realistic path to profitability, tech companies reliant on other tech companies for revenue growth, and non-tech businesses without a lot to show for their AI investments, unquote. And he argues that this is a different kind of bubble. So what if it pops, or when it pops, depending on your outlook? Andy Lowry is a staff writer at The Atlantic, author of Give People Money, and has a new book coming out called The Time Tax, How the Government Wastes Our Time and How to Fix It. She joins me now to talk about her latest Atlantic piece, The AI Bubble is No Ordinary Bubble. Annie, always great to have you. Welcome back to WNYC.
Thank you for having me.
And listeners, you're invited in on this one. Do you work in tech or on Wall Street or in an industry that's been touched by the AI build-out in some way that's relevant to this discussion? 212-433-WNYC, 212-433-9692. Has your job changed because of AI for better or worse? Are you watching your retirement account and wondering how exposed you are to all this, maybe trying to manage that? 212-433-WNYC, 433-9692, call or text. What do you mean by no ordinary bubble, Annie?
It's an unusual bubble for a couple of reasons. So first of all, I think it makes sense to think of it as two bubbles. So there's a bubble maybe having to do with the capital expenditure, which is the cost of the AI build out. Unlike a lot of tech products, AI uses a lot of real resources, especially chips. So America, in the United States, we're expecting roughly $2.7 trillion to be spent on data centers and AI infrastructure through 2030, which is obviously just a couple years from now. There's also an equity bubble, perhaps a valuations bubble, which is something we're maybe more familiar with. And what's kind of unusual, what's unusual about this, I think, is that, your average person has nothing to do with this. They're not investing in these companies. This is not driven by active day trading. This is not something like Bitcoin where, your cousin is getting in on it, or the housing bubble where a huge number of Americans were involved in kind of taking out mortgages on speculative properties. The other unusual thing is that it's happening not when credit is super cheap, right? This is not a zero interest rate environment. In fact, relative to where it's been, credit is kind of expensive. And so these big companies are financing that build out in part with their own real profitability. That's the real money that they're making, but in part with corporate debt and private deals made through non-banks, what's sometimes called the shadow banking system. So those are really unusual facets.
How convinced are you that it is a bubble? You mentioned the mortgage bubble. Most people listening now can remember how devastating and long-term the effects were when that bubble burst in 2008.
Yeah. And, I think that the fact that most Americans are not involved, right? You and I could not right now decide to go invest in Anthropic and OpenAI, right? Those are not public companies. We'd have no way to do it, right? They're not taking our money. So that could shield people from this in some ways. The other thing is that big tech companies right now are very, very profitable. They're very creditworthy, and that's real, right? Just Google by itself made $160 billion in profit last year, not in revenue, in profit. So I think that adds this little bit of the buffer. But I think about that number, $2.7 trillion being spent on this. That would mean that, these businesses would need a $2.7 trillion plus interest return just to break even. That's a lot of money. That's a lot of money. And it would need to happen kind of quickly. We don't have a lot of visibility into the structure of these deals, right? When are things going to need to be paid back? Some of it's very long range, but some of it might be shorter range. Some of it might be very leveraged in ways that we don't understand. That's the stuff that I really worry about. And, the stock market's going to do whatever it's going to do. There's always corrections. I would be shocked if there were not some correction at some point. Does that necessarily lead to a lot of economic carnage in the real economy? Maybe, maybe not. The dot-com bubble bursting led to a recession that was pretty painful and a lot of credit dried up. But I think it remains to be seen. If I had a really good understanding of how this was going to all play out, I would probably be in a different profession. But I definitely think that there's a lot of signals that are flashing very bright red. And in fact, a lot of investors who are investing have started saying things like, wait, whoa, this is a lot of money. We don't even, have the capacity to be financing this much, right? Like, I think that you're already starting to see that reticence about, wow, this is costing a lot. Are we really devoting these resources to a bet that's going to pay off, not just in the long term, but in the time scale that is identified in these contracts?
As we continue with Annie Lowrey from The Atlantic on her article, her forthcoming book is The Time Tax, How the Government Wastes Our Time. Her article in The Atlantic is The AI Bubble is No Ordinary Bubble. Are there contrarians here to the thinking that you've been laying out who think, this bubble this actually is not a bubble and these valuations are going to be paid off in profits?
Absolutely. Look, so one thing to note is that the big companies that are driving all of this spending, Amazon, Microsoft, Alphabet, or, Google, Meta, Oracle, they're all betting that this is going to pay off. They are spending, just those firms, roughly $700 billion a year to make this happen. And I think that part of the reason they're doing that is they have more visibility into where this technology is headed. And the big bet here is that AI is going to be useful for basically every American business, whether in a big way or a small way. But just in the way that software became a tool that virtually every American business was buying, that this is going to become the next round of that tool. This is already happening. It's already being deployed. So, the big question looming over all of this is how much are businesses and individuals willing to pay for those AI tools? And how much do they actually improve productivity and raise profitability, not just in tech companies, but in companies, all kinds of companies, right? We need for this bet to pay off for them, they need the entire economy involved in this, basically. And I think that remains to be seen, right? Right now, this year, American households and businesses will spend roughly $50 billion on AI tools. And, that's a lot of money, but that number is going to need to go up a lot in order to pay off that debt and make this investment worth it. For some companies, so Anthropic's revenue is growing faster than virtually any other company that we've seen. For other companies, less so. Right now, a lot of businesses are saying this is not exactly leading to the profitability boom that we thought it would. That could be just because they haven't really figured out how to use it yet. It could just need more time. It could be that this technology is not exactly what everybody in San Jose thinks it is. And that remains to be seen. Some businesses, obviously like software businesses, are finding this, software development businesses are finding these AI tools just remarkable. Other businesses, they're kind of saying, oh, okay, maybe it helps in the margin. Maybe it doesn't help at all. Maybe it creates other problems. And so that's like a very ongoing thing that we're at the very beginning of.
This isn't in your article, but do you have any sense that the new regulations around data centers in the name of reasonable utility rates for regular ratepayers is making it less likely that these AI investments will pay off? We have this new one-year moratorium in New York State on major data centers. In New Jersey, they're trying to make the companies that build the data centers pay more for, the electricity infrastructure that they're going to require. if it's getting either more expensive or just prohibited to build the data centers that AI relies on, as you know, hopefully for them the public use of it grows and grows and grows and grows. Is that a factor in the possibility of a bubble? Is that too hypothetical a question at this point?
No, that's not too hypothetical a question at all. And I think that there's really two big risks here. So one is exactly what you said. The US basically says, and I think it's worth noting here, AI is not popular among the American public, right? A lot of people feel like this is a technology that's unproven, that's going to destroy a lot of jobs because people like Sam Altman have said it's going to destroy a lot of jobs. They're like, okay, it makes search a little bit better. They don't like it. They don't want it. And politicians are reacting to that because we're also in a high inflation environment, an environment in which things are very expensive. Families don't want to get squeezed. They don't want their water bill and their electricity bill to go up and their grid to get worse because, you know, a bunch of people in Silicon Valley have decided that that's the future. People do not like it. And so from that stems two risks. So one risk is, yes, that we don't get those data centers. And so the cost of the AI goes up, which means that its return is going to have to be higher for businesses to buy it. The other risk, which is almost the opposite or the inverse risk, is that they develop models that don't require the compute power that they think that they'll need it. And so all of this money that's been spent on the data center build out ends up, it would be as if we had put Segway paths all over New York and then nobody used a Segway, right? So I think that there's actually quite a bit of risk there. And in general, I think that politicians' reticence to get in on AI and say, hey, this is the future. Instead, you have a lot of politicians saying, I'm not going to let these people make it so that, your electricity bill goes up double. That's not fair. We haven't agreed to that. And so I think that there's some very, very present risk there. This is not hypothetical.
This is like, I have this, what I call Bryant's two-part law of affordable housing. Part one, everybody says we need more affordable housing. Part two, everybody says just don't build any near me. And in this case, almost everybody says AI is evil, and then almost everybody uses it.
Absolutely. Absolutely. And, one thing that I think is kind of funny about this, I didn't get into this in the article, but I find it fascinating. There's this huge build out. $700 billion of investment in the United States alone right now. But the build out itself is not really improving the economy that much. Construction employment hasn't gone up that much because these data centers are actually pretty easy to build, right? They're just big warehouses. And a lot of the money is going to chips, which are, they're kind of like the food that you would feed your horse, right? It's a consumable. The chips burn out. And so in a lot of ways, a lot of that real investment isn't having the kind of positive economic effects that you would see in a boom like this. So take the housing boom, for instance, right? Tremendous amount of employment in construction, in real estate, in associated industries. That was real money that was going back into economies. Obviously, this ended very badly. But for the time it went on, it was kind of a rising tide that was lifting all boats in some places. Again, that's holding the fact that so many homeowners were so hurt by that in such a profound way. But at least the housing that got built in the boom was still useful, right? Like those homes are all still lived in now. Is this stuff going to be useful if they don't end up using it? No, I don't think so.
Craig and Morganville, you're on WNYC with Andy Lowry from The Atlantic. Hi, Craig.
How you doing? What I don't understand is how everybody doesn't get how this matrix has already begun. In the 1990s, there used to be a financial instrument called junk bonds, and everybody was so shocked how everybody lost their money. The first word in this is artificial intelligence. It's not real. Human beings have created it. We had an instance where the models already hacked into somebody else without anybody telling them to do it. I just can't believe how blind everybody is.
With people telling them not to do it. I'm going to touch on that in a minute. Maybe you heard that story, listeners, on Morning Edition today. But and Craig's line dropped off. But he made his point about artificial. But Annie, I don't know if you heard that story. I can't remember which AI company it was, but they gave it a test of some kind. and said, okay, you are not allowed to go to the internet to perform this test, right? You're not allowed to go outside of yourself to perform this test. But the AI figured out a way to do that anyway. And it bucked its reins and it broke into the internet against the way it was instructed by people and figured out a way to hack itself through other systems that, again, it was not supposed to do as it was supposedly programmed for. And that really is scaring people. Did you hear that story yet?
Yeah, absolutely. And so this was OpenAI, which said that, one of its models that is not released yet had hacked this other company, Hugging Face. And it's terrifying, right? It's also terrifying because what does it mean if these companies are coming out and saying we don't really have control of these things?
Right.
And to go back to the caller's good point about junk bonds, right? I've thought about this a lot that, in the lead up to 2008, there was this idea that there was this endless pool of financial liquidity and the risk models had gotten so much better. And we've created this new kind of cool thing called credit default swaps. And don't worry, credit default swaps are not regulated in the way that other things are regulated. One thing that we are seeing here that really worries me, and I so wish that I could tell the listeners that I had a really good handle on this, but I don't because it's not public. Nobody except for the people inside these companies has a good handle on these deals. A lot of these deals are being made through the shadow banking system, right? We don't exactly know who is counterparty to who. A lot of the deals are being structured so that they don't appear on traditional balance sheets. That's awfully worrying. And so, this is a situation where, and these are not banking firms necessarily that are being regulated by the Treasury, the Fed, and the other regulators as closely, right? This is a lot of tech firms and, again, a lot of private credit institutions. So maybe nothing comes of it. Maybe it's all fine. I don't know. Having lived through 2008, I don't know. And we don't know. So I agree that there's just a lot of questions, right? And it's a good point. What if there needs to be way more AI regulation? What if this needs to slow down? How does that affect this buildup that we've had in the economy? I don't think that anybody knows. And again, it could be nothing.
One more text. Listener writes, we're past the bubble problem. It's a problem from yesterday. Right now, Chinese AI companies are making a capitalist move by monetizing the AI market with their very cheap access to services, practically killing all American AI companies in the process. Do you have a take on whether that's an accurate description? And if so, I would imagine that would also challenge the valuation of these companies in a way that could suggest a bubble.
Absolutely. And this was what I was talking about before, right? Let's say that we have AI models that come to the US and get sold, and they don't require the kind of power and the extensive infrastructure that the AI models that we're using currently use, right? That is going to mean that there is way less revenue for US chip makers, right? NVIDIA and Intel. It is going to mean that there's not the same revenue for these businesses that are anticipating all of this AI revenue. And one thing about the tech companies right now is a lot of their revenue is being generated by investing in one another and trading services and hardware amongst one another. Mm-hmm. So there's this very circular AI economy, which, again, we know these circular economies can tend to be quite fragile. So I think that this is a really, really big risk. I do not understand enough about the guts of these AI models to say whether it's possible to get one that works as well without the compute power. But it's a very, very significant risk. And in fact, we already saw a small market correction related to this. China came out with one of these AI models that seemed to do it much more efficiently, much more cheaply. And then the valuations went back up when the coding tool, Claude Code, came out. So I do think that this is a very, very present risk.
So maybe there's an AI bubble, maybe there isn't, but it's a risk, as Annie Lowrey has reported in The Atlantic. Annie, who also has a forthcoming book called The Time Tax, How the Government Wastes Our Time and How to Fix It. Consider this an on-air invitation to come back when your book comes out. And Annie, thanks for some time today.
Thank you very much.
WNYC's journalism and storytelling is heard by millions of passionate listeners. Sponsors of our programming gain our listeners' attention and their respect. Learn about how your organization can support WNYC and WNYC Studios at sponsorship.wnyc.org.